Hello, everyone. Datavault AI Inc., trading under the ticker Dvlt on the NASDAQ, opened the week with a noticeable dip. On Monday, December 8, 2025, the stock slid by roughly 7%, catching the attention of traders watching the ongoing volatility in the AI sector. Today, we're diving deep into what's driving this downward movement, the underlying financial dynamics of Datavault AI, and why this stock continues to generate serious discussion despite short-term pressure. In the world of fast-paced trading, preparation isn't just helpful, it's essential. Tim Bowen, the lead trainer at Stocks to Trade, often says that half of the work is done before the opening bell even rings. His philosophy reinforces the idea that success in trading comes from doing the legwork ahead of time, studying patterns, scanning for catalysts, reviewing financials, analyzing pre-market sentiment. These are the activities that help traders navigate the chaos once the market officially opens. And that lesson couldn't be more relevant for a company like Datavault AI, which has been making waves recently. Over the past few months, Datavault's financial transformation has become a talking point on Wall Street. Even though the company reported a net loss of nearly $33 million, the broader picture shows a business adapting to a rapidly shifting economic environment. Datavault generated close to $3 million in operating revenue, signaling that its core technology and services still have meaningful commercial traction. A closer look at the company's cash flow offers even more insight. Datavault has been tightening its spending and adjusting its operations in a way that improved cash flow from its core business activities. That's a critical move for any tech company that's in an aggressive growth phase, especially one investing heavily in artificial intelligence research. Meanwhile, the company's financing activities helped offset some of the challenges on the operational side, although that support came at a notable cost. The real battle for Datavault now lies in improving profitability. Their EBITDA remains pressured due to long-term obligations and heavy ongoing investments. Gross profit margins also need to climb to better absorb day-to-day expenses. However, their leverage ratio at 1.4 shows they're maintaining a balanced approach to debt, not overextended, but adequately leveraging financial tools to keep scaling. Where investors raise eyebrows is in Datavault's profitability margins. An EBIT margin that dips into the deep negatives, around 1,100%, signals the obvious. Costs and investments are massively outweighing current earnings. Yet this isn't unusual for AI companies still building platforms and developing products that require extraordinary upfront capital. In fact, some of the most groundbreaking tech firms went through similar phases before reaching their stride. For traders looking beyond short-term noise, Datavault's long-term trajectory still has compelling elements. Their commitment to advancing AI capabilities has positioned them as a serious contender within the competitive AI-driven software market. The revenue growth they've been posting quarter after quarter shows that the company's offerings are gradually gaining commercial strength. Adding to the momentum is a string of partnerships and collaborative ventures. These alliances with well-known industry names are boosting Datavault's credibility and expanding its access to markets and expertise that would take far longer to build alone. Strategic partnerships often serve as catalysts for investor confidence because they signal shared vision, shared resources, and shared growth potential. Another point working in Datavault's favor is their operational restructuring. The company has been refining processes to align with customer needs more efficiently. This kind of internal efficiency often doesn't get talked about enough, but it directly impacts long-term growth, cost savings, and profitability. When a tech company grows while minimizing internal inefficiencies, investors tend to take notice. And that's exactly what's happening with Dvlt. Their innovation pipeline also plays a major role in their long-term outlook. Datavault has been pushing deeper into machine learning, intelligent automation, and advanced analytics, technologies that are becoming the backbone of modern enterprises. As the demand for scalable AI tools continues to rise across industries, Datavault is strategically positioning itself to capitalize on these opportunities. So even though Dvlt took a hit today, the broader narrative is far more complex. This isn't just another tech stock reacting to a bad news cycle. It's a company in the middle of a transformative phase, balancing high-risk, high-reward innovation with financial recalibration. The stock may be volatile, but for traders who understand the long-term potential of AI and data-driven enterprises, volatility often means opportunity. Tim Bowen captures this sentiment well with one of his well-known insights. Everything in the market has a pattern. You just have to stay long enough to recognize it. Datavault AI's trajectory isn't fully clear yet, but the pattern of innovation, restructuring, and strategic partnerships suggests a company laying the groundwork for long-term relevance. Before we wrap up, remember, this is stock market news, not financial advice. The goal is to help traders identify catalysts, understand market drivers, and stay alert to shifts in momentum. Stocks to Trade News specializes in covering high-volatility areas like AI stocks, penny stocks, biotech catalysts, Robinhood favorites, and breaking developments that can spark sudden price movement. If you're trying to level up your trading strategy, consider exploring the Stocks to Trade platform. It's built for active traders, complete with news scanners, charting tools, social sentiment tracking, and everything needed to stay ahead in fast-moving markets. This is not financial advice.